Welcome to the CAQ's second Audit Insider webcast. I'm excited to have a terrific lineup of regulators and leaders in the auditing profession to talk about SEC developments and PCAOB matters. First up this afternoon will be a conversation with my CAQ colleague, Annette Shoemaker, and Anita Doutt, who is currently Senior Associate Chief Accountant at the Securities and Exchange Commission. Welcome, Annette and Anita. That conversation will be followed by a brief conversation between Annette and Mark Shannon, a partner at Crowe, on planning considerations for this year's audits. Thank you for being here, Mark. We'll then change gears and I'll have a conversation with Barb Vanich, Chief Auditor at the PCAOB. Welcome, Barb. After that, we'll have a brief panel on PCAOB matters, where I'll be joined by Liz Gantnier, an audit partner and regional accounting and auditing director from FORVIS, and Rohit Alance, a partner in the SEC regulatory matters in the National Professional Standards Group at Grant Thornton. Always great to have you here with us, Liz and Rohit. This live webcast is eligible for CPE, and there will be participation checks via polling throughout the webcast, and you will need to respond to each of those in order to earn your CPE. The goal is to get CPE certificates out to participants no later than 3 weeks after this webcast. Before I hand it over to Annette, let's launch our first polling question to get a sense of who we have in the audience this afternoon. Just whenever it looks like we've got critical response rate, if you want to push those results. Looks like we've got a lot of external auditors here, a lot of other, as well as a smattering of the other usual stakeholders we expect to tune into CAQ webcast. So excited you're all here this afternoon. With that, I'm going to turn it over to you, Annette.
Thank you, Dennis, and welcome, Anita. Thank you for being with us today. I thought we could start our discussion by providing the audience with an overview of the wide variety of responsibilities and activities of the SEC's Office of Chief Accountant. Can you provide us with an overview of the different groups within OCA and what they do?
Sure. Before I get started, thank you for the introduction and thanks to the CAQ for providing me the opportunity to speak here today. I do have to give the standard disclaimer that my remarks today are provided in my official capacity in the Office of the Chief Accountant, but don't necessarily reflect the views of the Commission, the Commissioners, or other members of the Commission staff. So the Office of the Chief Accountant, or OCA, is the principal advisor to the Commission on matters of accounting, auditing, and auditor independence with respect to the application of the federal securities laws. OCA is small but mighty. We're comprised of about 50 people who have a broad mix of experiences with various professional backgrounds. OCA's priorities are anchored to the SEC's overall mission and strategic plan, and our focus is and has always been on promoting high-quality financial reporting of our registrants for the benefit of investors. Our office specifically is divided into 4 major groups. We have the accounting group, which is probably like the most famous group, the professional practice group, the international group, and we have an Office of Chief Counsel. We all have different responsibilities and roles supporting the overall mission, so I'll kind of walk you through some of those. The accounting group leads the SEC's efforts to oversee accounting standard setting by the FASB and to monitor international accounting standard setting by the IASB. In conjunction with the Corporation Finance Division, they also issue staff accounting bulletins that inform the public on staff views on important accounting issues. The accounting group also consults with registrants, auditors, and other commission staff on the application of accounting standards. Our professional practice group, which is where I work, we provide expert advice relating to auditing, auditor independence, and internal controls. PPG also assists the Commission in its oversight of the PCAOB, primarily through its oversight of PCAOB rulemaking and standard setting, inspections, and its annual budget. We also manage the resolution of auditor and preparer independence and ethical matters that have been brought to the attention of the Commission. Our international group provides advice to the chief accountant on international auditing and accounting issues, and also collaborates a lot with the OCA's accounting and my group, the professional practice group, to provide both governance and technical input to international accounting, auditing, and regulatory organizations that have a similar financial reporting objectives to the Commission. And lastly, our Office of the Chief Counsel provides legal guidance to the chief accountant and other OCA groups in support of the Commission's mission. They also are extensively involved in rulemaking and other legal policy matters, and are responsible for supporting the SEC's Division of Enforcement in all aspects of its program related to financial reporting, including recommending things like disciplinary actions against accountants and firms brought under Rule 102E. OCA is also, we're what's called a service office. So one of our main functions is to support other divisions and offices in the Commission in a variety of capacities, from rulemaking to enforcement matters, but really it runs the gamut.
Thank you, Anita. That was a great summary. You mentioned the OCA's role in overseeing the PCAOB. Can you describe how the OCA performs that oversight function?
Sure, and I think you'll be hearing from Barb a little bit later on in the webcast as well on this topic. But in general, OCA supports the Commission in its oversight of the PCAOB in a number of ways. We support the Commission's appointments to the board, including the recent appointment of George Bodick as a new PCAOB board member, who's going to replace board member Doutt, whose second term ends at the end of this month. We also support the Commission's efforts to consider and approve new PCAOB auditing standards and rules. We support the Commission's review and approval of the PCAOB budget and oversight of the PCAOB's inspection program. So just diving into those a little bit in more detail, with respect to rulemaking and standard setting, for those that are unaware, once a PCAOB rule or standard is approved by the board, there's a final approval by the Commission that's required in order for the rule or standard to become effective. So our job in OCA is we facilitate the Commission's review and, as appropriate, approval of those standards and board rules. We work closely and very collaboratively with the PCAOB to review the proposed standards, the comment letters they receive, and other information that's submitted to us by the PCAOB. We then make recommendations to the Commission regarding the approval of those standards. Currently, the PCAOB's recently approved confirmation standard was submitted to the SEC for review. It was posted to the Federal Register yesterday, and the comment period is open until November 7th, so we encourage commenting. Lastly, what I'll touch on real quick is something, we also support the Commission's oversight of the PCAOB's inspection program. So Section 104H of SOX provides the right to a registered public accounting firm to request an interim Commission review with respect to a PCAOB draft inspection report under certain conditions. Although these are few and far between, we do receive such requests, and they typically come in the form of like Part 2 publication challenges or comment form challenges. And based on the information submitted, the Commission, as facilitated by us and OCA, will consider whether the PCAOB's assessments or determinations are arbitrary and capricious or otherwise not consistent with the purposes of SOX. That's a high-level summary.
That was very helpful, Anita. Now that we're approaching the end of the year, what reminders do you have for registrants, auditors, and audit committees as they prepare for year-end financial reporting and next year's audit work?
Sure. So maybe I could highlight some key thoughts as it relates to, risk assessment as well as, auditors' professional skepticism. So we've heard some troubling feedback that management and auditors may at times be too narrowly focused on matters that directly impact financial reporting and disregarding broader entity level issues that may have an indirect impact on financial reporting. This is a data breach in a system that's not part of ICFR, or a repeat non-financial reporting related regulatory finding that's, designated as low risk, or a revision or a little R restatement, or maybe a counterparty risk limit breach. Some management and certain auditors could be, inadvertently biased toward evaluating each of those incidents individually or even potentially rationalizing away disconfirming evidence to conclude that these matters don't individually, or when you aggregate them together, rise to the level of management disclosure or an audit committee communication requirement. So when you have such a narrow focus, it can be detrimental to investors because it can result in material risks to the business going unaddressed and undisclosed, which has the knock-on effect of diminishing the quality of financial information. So to be effective, risk assessment processes need to comprehensively and continually consider issuers' objectives, strategies, and related business risks, and importantly, evaluate contradictory information. So, for example, management and the auditor's risk assessment process may consider observations from regulators, analyst reports, short seller reports, and then business risks like a company's loss of financing or customer concentrations. These types of things could affect an issuer's ability to settle their obligations and then have an effect on the risk of material misstatements in the financial statements. So kind of taking it back specifically to auditor responsibilities, speaking in a level of generalities, I think we've been starting to think about auditors' responsibilities and the way they approach auditing in two ways. First, there's what we kind of think of as like the limits approach. This is where it can be described as an audit firm doing like a check the box type of audit. They're planning and conducting procedures based on what it doesn't need to review or can look away from. So it's essentially performing the bare minimum to support the conclusions in the audit report. And the second is the skillful approach. This is where auditors focus not only on what they're the basic minimal requirements, but also on what they should review and inspect. And then they engage in a robust audit process that supports high quality, reliable financial statements that investors can put their trust in. I think it's our view, obviously, that all auditors should strive for skillful and iterative auditing and should never be content with a limit approach to auditing, especially when it comes to fraud detection and prevention. I think at its core, auditing is about investor confidence and trust in the reliability of the financial information. And trust is earned, but it's not static and it's not assumed. So the audit profession needs to continually focus and maybe in some respects do more to maintain and nurture that trust. It's our hope that the profession would turn away from any kind of limit approach and strive instead for skillful, robust, and iterative approach to auditing. One last point, there's another key gatekeeper that we should discuss who has a key role in playing in enhancing risk assessment and professional skepticism to the auditor, and that's the audit committee. Auditing standards mandate and emphasize that auditors exercise professional skepticism. So as companies encounter new challenges, this could increase the risk of fraud, and management might have different incentives, pressures, opportunities, and rationalization for their misbehavior. So I think what's important to keep in mind is that implying professional skepticism, it can sometimes come at a cost. Budget overruns, conflicts with management, or even maybe external pressures on the auditor. So building and maintaining a strong relationship directly with the audit committee that includes, frequent proactive engagement and discussion on current and evolving events that impact financial reporting and management's response is a tool that can help prevent these costs from standing in the way of a high quality audit. So to be more specific, audit committee independence and active involvement and an independent relationship with the auditor can reduce the barrier to exercising professional skepticism. So we're encouraging audit committees to meet with the auditor, independent of management, whether it's through formal or informal meetings, to have an open dialogue that provides adequate time for in-depth discussions of financial reporting and internal control matters. Dedicate time to asking the auditor probing questions to assess audit quality. Speak directly with the audit engagement team about the importance of professional skepticism and that the audit committee's support of the engagement team. And this is a really important one. An audit committee needs to avoid substituting management's judgments or interactions with the auditor for the audit committee's own judgments and engagement with the independent auditor. We lastly kind of encourage audit committees to leverage their unique independent oversight position to help set and monitor the tone for management's relationship with the auditor. And audit committees should be evaluating the auditor's interactions with management as well. And last point, audit committees acting on behalf of investors should be choosing the auditor primarily based on audit quality, and because this will enable and encourage auditors to compete for engagements based on quality rather than fees.
So those are some super helpful reminders. Thank you, Anita. You mentioned risk assessments. The SEC's chief accountant, Paul Munter, recently issued a statement on the importance of a comprehensive risk assessment by auditors and management. Are there any other aspects of this statement that you'd like to highlight for us today?
I think, I think really kind of what I covered before when I was talking about reminders for auditors and management and auditor responsibilities and audit committees is really that, to be effective, risk assessment processes have to be, comprehensive and continuous, and they have to consider the business holistically in order to be effective.
That's helpful. One last question for you, Anita. Are there any trends in consultations that you'd like to share with our audience today?
Sure. From a PPG perspective, as I kind of mentioned at the outset, we're responsible for handling independence consultations. And so I do have some observations, to share with you all related to those. To start, maybe a general observation of OCA staff. I think this kind of goes back to the limits discussion earlier. We have seen situations of what we'll call maybe decreased vigilance when it comes to auditor independence. The checklist type mentality that can present itself as a focus on how close to the line can I go without having a technical violation or a per se violation of the independent standards. And I think one thing that we've been highlighting a lot lately is that compliance with the prohibitions that are outlined in Rule 201C, they are necessary, but they're not sufficient. And so I think this type of checklist mentality or this type of, decreased vigilance, this type of tone at the top has the potential to erode an ethical culture at a firm. And maybe one other little minor point is that, the line formed by the SEC and PCAOB independence rules, that's supposed to be a compliance floor. And so in our view, to maintain this critical gatekeeper function and in thinking about training the next generation of public accountants, it's really important and critical that accounting firms, starting at the top, foster and prioritize as job number one of accountants is it's a culture of ethical behavior in all their professional activities, especially with respect to independence. And from the perspective of OCA, what we've seen through consultation, specifically outreach, news articles, things like that, there's this perception of maybe an increase in the provision of non-audit services, business relationships, other transactions that could be introducing complexity to the entities that need to be monitored by the accounting firm for independence. Some of these complex relationships, because of entering into business relationships with companies for service offerings or things like that. We've also read articles about some of the recent consolidation in the profession that's being driven by private equity investment. So when private equity firms invest in accounting firms, certain entities within the private equity structure may be considered an associated entity and therefore be considered part of the accounting firm. So again, this is another instance where indirect relationships could give rise to appearance or substantive issues related to independence. Paul issued a statement on this topic specifically, and I would encourage you all to read that. But these examples, what they indicate is that an effective firm-wide or network-wide approach really has to look not only to the current impact of these relationships, but to the potential future impacts, especially for relationships that can't be easily unwound. So let's say an audit firm is contemplating a business relationship with a non-audit client that's involved in a lot of investing and acquisition activity. Today, maybe there's little to no impact on the existing audit client relationships. But what the firm has to consider is, has it appropriately assessed the potential future impacts of the non-audit client's, acquisitive and investing activity on its relationships in the future? This is going to be the important information for the auditor and the audit committee to understand as they assess auditor independence each year. So audit firm monitoring in these instances really needs to be very vigilant to ensure that firms understand and assess the organization that they're getting into business with, not only of the non-audit client the firm is exploring a business relationship with, but also of the overall ownership structure of their existing clients and prospective audit clients. Because for public companies, this is an immediate risk, and for private companies, it's a likely prospective risk in the event of a future IPO. So as always, OCA staff are available to engage in consultations regarding these matters, but maybe just throwing down a bit of a caution flag is that a lack of sufficient monitoring or a failure to anticipate what we kind of see as these wholly foreseeable risks, like future IPOs, it wouldn't really support the auditor's objectivity and impartiality argument, or be a hardship argument that we would really entertain. And then I guess one last final point reminder about independence is about membership in alliances. We understand the benefits of membership in an alliance and that it enhances the capabilities to provide professional services. However, firms that are members of these alliances should consider the effectiveness of their quality controls, ability to identify situations in which the firm has described its membership in the alliance outwardly that could lead a reasonable investor to believe that the firm has an interest in maintaining the reputation of the firm sponsoring the alliance. For example, such a perception by a reasonable investor could lead to the appearance of potential conflicts or mutuality of interest between the alliance firm and its client, should the firm sponsoring the alliance be performing work for the audit client that, for example, could be subject to audit by the member alliance firm. So that's all I had for today, Annette.
Those are some really valuable insights, Anita. Thank you for taking the time to be with us today and for sharing your thoughts.
Thank you all.
Now we'll turn over to Mark Shannon for a discussion of this year's filing season from a public company auditor perspective. Mark is a partner in Crowe's national office, and prior to joining Crowe, he served in the SEC's Division of Corporation Finance as an associate chief accountant. He's also a member of our SEC Regulations Committee. Thank you, Mark, for joining us today.
Glad to be here.
Mark, as you well know, this is the time of year when auditors are planning for year-end audits and gearing up for yet another busy season. Based on what we've just heard from Anita, and as well as other recent developments in the PCAOB arena, what are some topics that are top of mind as you plan for this year's audit cycle?
No, great question. And I'm going to tee it up with just one word, and it's going to be change. Change happens all the time. And if you think about what Anita just said, there was really two topics that really resonated with me in terms of change. One is independence, and I'll start there because I'd sort of be remiss as an auditor if I didn't think about independence, and changes in your business relationships, changes in the services that you're providing, just general change. You have to monitor that and be iterative and thoughtful about how you're monitoring independence. Similarly, a lot of Anita's comments really focused on the word risk assessment, risk generally. And I was sort of reflecting as I was preparing, I was looking at some of the recent PCAOB spotlight documents that have come out. There's been 4 that I looked at, the last 4 that have come out. And the word risk is embedded throughout those documents. So everyone is thinking about risk. So if you're an auditor, or you're an audit committee and you're thinking, okay, well, what should I think about for this year's audit cycle? I would say think about risk. Risk is incredibly important to everything that we do. And as auditors, we need to be in tune with risk. Risk is going to evolve, I guarantee it. If I think about where I'm sitting here today, the world and risk is different than it was just 2 or 3 weeks ago. And when we sign audit opinions, if you're a calendar year entity, or sign the audit opinion in February, we might sign it in March. but the likelihood that risk will be different then than it is now is I would say, high. So think about economic uncertainty, geopolitical events. If you're an auditor, have you done a deep enough analysis on those items and how they might impact the risk of material misstatement and your auditing procedures that you're designing to deal with those risks of material misstatement? Think about accounting estimates. That was highlighted in one of the PCAOB's spotlight documents as a critical area. If you're thinking about accounting estimates, you're thinking about running off projected cash flows, those things change over time in response to risks. And Anita mentioned changes in business objectives or strategies. Those things happen all the time. And they might not happen in the documents that you're reviewing. They might happen on a company's website. They might happen on an earnings call. They might happen on an interview that the CEO is doing with CNBC. And you need to think about those things critically in the context of risk and your risk assessment process. And you have to think maybe in an artful manner about, well, how is that going to impact products and services that this company provides? Is it going to impact, is technology going to impact the company? And if so, how? We might be transitioning to a lower carbon economy. How is that going to impact the company? And how does that impact the risk of material misstatement? Anita mentioned audit committees. Have you engaged with the audit committee on risk? Their independent views of risks, really develop that relationship. And I've been sort of talking about risk from the perspective of the client and its financial statements, but firms have risks as well. So if you think about your staffing, like if you have staffing issues, I know remote work is sort of an interesting thing. We've sort of gotten used to it, but remote work still has the potential to diminish an audit firm's ability to identify a potential misstatement. So audit firms have risks that they need to think about as well. And of course, the auditor's work in general is really predicated on that effective, iterative, and robust risk assessment process because of the nature of risk and how it changes over time.
Thank you for tying in Anita's observations with what it means to you as an auditor. Is there anything else that you'd like to add with respect to Paul Munter's statement on risk assessments that you think auditors should be considering going into busy season?
Yeah, I think there's probably two things. One is the iterative risk assessment process that's really embedded in Paul's statement. And as I mentioned, risks change. You do need to do it throughout the audit process. We're in planning now, so you're probably going to do a risk assessment now, including risk of fraud. But as things happen, as we get closer to that opinion date, risks are going to change. And so you really need to do it over and over and over again to really get to that skillful approach that Anita laid out. The other aspect that really resonates with me from Paul's statement is the root cause analysis and the could factor. In particular, if you find a deficiency outside your financial reporting objective, that's another thing that can be pretty challenging. And as auditors, we need to take up that challenge and really think critically about what is the root cause of this. And it's really easy when you have a process level control activity. It gets a lot harder when you're thinking about a risk assessment or a monitoring issue or a control environment issue. And I think the other challenging aspect is when you're aggregating, you really have to think hard about commonalities and where do all these deficiencies lie in terms of what's in common about these things. So as Paul noted, this thought process of risk assessment, it's just extremely important to the foundation of auditing and also those communications that we need to make to users of financial statements and to the audit committee as an auditor.
It sounds like risk assessment is like the basic building block there. Yes, yes. Thank you so much, Mark, for those insights and for taking the time to share them with us. And so thank you, Mark. Now I'll turn it back over to Dennis for his discussion with Barb.
Thanks, Annette. Well, welcome, Barb. Thanks for making some time to be with us this afternoon. I know you and your team are extremely busy, With that in mind, and knowing how busy you are with multiple proposed standards and adopting final standards this year, anything you want to share about the standard setting agenda or projects as folks are gearing up for their year-end audits?
Yeah, thank you, Dennis, and thank you for inviting me. Let me start with the disclaimer that my views are my own and not necessarily views of the board, its members, or other PCAOB staff. With respect to standard setting, we hopefully will be updating our public agenda soon, perhaps in the next few weeks. So if you're interested in the timing of any of our projects, please watch for that update. With respect to year-end audits, Anita addressed some important points on risk assessment and on independence, and I would certainly agree with those. I would just add one point to that, yes, risk assessment is important and it's iterative, but just as important to that is your response to that risk. If your risk assessment changes, your planned response might need to change. For example, if you had planned an audit response based on a lower risk of material misstatement and that risk of material misstatement is now higher, just be sure that your audit plan and the plan procedures are responsive to that. What I would add also, and I certainly understand that there is never a shortage of things to read in our profession, but if you're going to read one of our staff documents before year end, I would draw your attention to our spotlight, which was the preview of 2022 inspection observations. That was issued in July, and it covers findings in different areas, and that's a good source of information for you as you go into completing year-end audits. Certainly a good document that's brief for audit committees to read, to think about how your auditors are responding to those types of issues. It may not be surprising. I mean, inspection findings were generally concentrated in 6 areas: revenue, inventory, accounts impacted by business combinations, long-lived assets, the allowance for credit losses, and equity. Many of the deficiencies identified in these areas related to testing internal control over financial reporting. Now, the spotlight includes more detail by size of firm. The other thing I would mention as you go into year-end audits, you've heard us talk about high rates of deficiencies, and all of us want those deficiencies to decrease, but don't take that as a criticism of yourself as an individual. Maybe it doesn't get said enough, but many of us have done your job, and so we understand and appreciate how hard you work. Don't approach this year with a defeatist attitude. While the inspection findings are up, there are teams that don't get inspection findings, and that team can be yours. There are lots of people out there at your firms and at the PCAOB that are trying to understand why these deficiencies are up, and that's not without challenge. And I think there's some speculation it's really a culmination of a number of things, including remote work and the Great Resignation, et cetera. So for more junior staff who are doing the audit work, if you don't understand, ask. If you need help, ask. I believe that while people who supervise you are very busy, they would rather explain something, even if they've explained it before, rather than have an issue later. Remember how important it is, what you do to the users of the financial statements, and they need you to bring your A game every day. Remember to remain professionally skeptical when it comes to fraud procedures. Don't just go through the motions. Really ask yourself how things could go wrong and how is what you're doing responsive to that specific risk. For more senior people in the firm, please let your people know that you have their back. Let them know that it's a strength and not a weakness to ask for help and to ask questions when they don't understand something or just think that something benefits from a more experienced set of eyes. Set the right tone at the top. The message from senior firm leadership should be unwavering in the importance of establishing a culture that prioritizes the importance of performing high quality audits and recognizes and rewards audit quality.
Thanks, Barb. Those are super helpful reminders for our audience. So I think they all appreciate it. I mean, in particular, I think what I found valuable in what you were saying is that don't go into this busy season with a defeatist attitude and recognizing that maybe, deficiencies and increases in deficiencies is not intended to be a criticism of any one person, and kind of a recognition that everyone's trying to do their best. But we are in a world that's experienced some pretty once in a lifetime events in recent years. And so maybe that could have made auditing a little bit more difficult. And so I also thought kind of your remarks on, if you've got a question, ask is really important. So I think that's super helpful to hear. And definitely that culture point around kind of tone at the top and audit quality kind of, coming from the highest of levels within the firms. I do think one benefit of the job I have here at the CAQ is I feel like I get to witness kind of that commitment to audit quality and the leaders I work with day in and day out. And so hopefully those that are in the field doing those audits also have the opportunity to see that same commitment to audit quality throughout their firms. So I think those are really helpful remarks as folks are preparing for year-end audits. So maybe my next question I had here for you is around, how does your team interact with other divisions within the PCAOB and the SEC? So we heard a little bit from Anita about how OCA is organized and what they do. What about the Office of the Chief Auditor and kind of, how you work with the SEC as well as other divisions within the PCAOB?
Yeah, sure. Happy to answer that. I will tell you that Anita gave such a great comprehensive answer that I really don't have anything else to add to that. The Office of the Chief Auditor at the PCAOB, we're about 30 people. We have attorneys, more accountants than attorneys, but attorneys who help us support the board and advising them on standard setting and on staff guidance. Our office, in addition to that, we support the Division of Registration and Inspections, particularly with the implementation of new standards and sometimes in interpretation of standards. We're part of the report review process, and we review all of their staff publications. Inspections, on the other hand, provides us with insights on practice. They help us understand and analyze inspections data, and they're part of our review process for any standards or staff guidance. We have less involvement with the Division of Enforcement and Investigations, but we do periodically review some of their documents. The division we probably spend the most time with is our economists in the Office of Economic and Risk Analysis. The economists are part of our standard setting teams, and they do the heavy lifting with developing economic analysis that informs our projects. We all spend time in relevant academic research, but in some cases, our OERA department actually performs their own research and seeks our views on post-implementation reviews. We have a lot of engagement with the board's Office of General Counsel, who, among other things, reviews our standard setting projects and assists with addressing legal issues. And I can't forget our Office of Communications and Engagement, who coordinate our public meetings, including advisory group. They assist us with outreach and informing us about what they're doing. And again, I can't add to what Anita said because she did a great job.
Thanks, Barb. That's super helpful. Looking to 2024, what recommendations do you have for the auditors and other stakeholders that are in our audience on what they should be looking for and how best they can help your team?
Sure. So with respect to standard setting, I mean, our standard setting agenda is public. As mentioned, we should be updating it soon with respect to timing, potentially adding additional projects. Currently, we have a number of active projects on our short-term agenda, and those are projects for which we anticipate board action in the next 12 months. And that includes quality control, firm and engagement performance metrics, going concern, substantive analytical procedures, and our attestation standards. In addition, we need to determine next steps based on our comment letter analysis of AS 1000, the amendments related to certain aspects of technology-assisted analysis, along with our project on noncompliance with laws and regulations. We also have projects on our midterm agenda related to fraud, interim reviews, independence, and our other interim standards. As far as how people can help for projects that aren't already proposed, we may do some outreach, and I hope that you'll be able to make the time for us if we call and ask for a meeting. For proposals, I would hope that people participate in the comment process. I know for those of you at larger firms, your firms will likely send in a comment letter. For smaller firms, I know that that can be more challenging to write comment letters, although just so everyone's aware, comment letters don't need to be long or comprehensive. They can be an email, they can address just one or two issues, and all of that is important. Some of the state societies submit comment letters. So if you're interested, you may look for an opportunity within your state society to assist with their process. Other ways you can participate, when there are open nominations for our advisory groups, I would encourage you to apply. If you are interested in keeping up with what we're doing, generally we give public updates at advisory group meetings. You can listen to those live. In addition, they're archived. In addition, our open meetings are archived, and you can always re-listen to the staff's remarks as you're going through a proposal. You can hear board statements, and that will give you an overview of whatever is being proposed or adopted. I'd also like to draw your attention to the supervision of other auditors. Those amendments are effective for audits beginning on or after 12/15 of this year, so your next year calendar year-end audits. And hopefully firms are thinking about this and getting ready, since some of those amendments affect planning. Overall, those amendments are focused on increasing the lead auditor's involvement in the evaluation of the work of other auditors. Important aspects of the amendments that occur early and in kind of your planning phase relate to the sufficiency of participation determination. And the amendments there require that the engagement partner determine whether the firm's participation in the audit is sufficient for the firm to carry out the responsibilities of a lead auditor. Those considerations that you look at in combination include the importance of the locations or business units for which the lead auditor's firm performs audit procedures, the risk of material misstatement, and the extent of supervision. The amendments in this area also provide consideration for the engagement partner to use in that reviewing that determination. While it doesn't specifically say so in the standard, that is not something that I would want to wait until year end. If your engagement quality reviewer has questions about that determination, that would probably be very good to hear that early. In addition, in the area of independence, the amendments require the lead auditor, when determining the engagement's compliance with independence and ethics, understand the other auditor's knowledge of those requirements and experiences in applying them. And they also require the lead auditor to obtain and review written affirmations regarding the other auditor's policies and procedures related to those requirements. There are other amendments as you get into kind of supervision of the audit. Now, obviously, in the interest of time, I won't go through those, but please stay tuned. I'm hopeful that we will do some kind of webinar on the supervision of other auditors not too long from now. Lastly, at the end of September, the board adopted a new standard on the auditor's use of confirmations, and subject to approval by the Securities and Exchange Commission, those standards and the standard and amendments would apply to all audits conducted under our standards, and they take effect for fiscal years ending on or after June 15th, 2025. So no need for immediate focus. There is some time, but what I'll throw out there is, when you have time, as you make time to look at the standard, to the extent you have questions, you can reach out to our inquiry line. If your question is addressed in the adopting release, someone will point you in the right direction. And if it isn't addressed, we may not be able to give you a response, but it is certainly something that we can think about for future training or guidance.
Thank you, Barb. I think that's all super helpful. I think as it relates to standard setting projects, it sounds like there might be some, if there's outreach on midterm projects, encouraging folks to be open to that engagement. As it relates to the standard setting process itself and writing comment letters, encouraging folks to participate in that process and right size that for what makes sense for the bandwidth and capacity they may have for submitting comments, and perhaps if they're not able to submit their own, look for other ways like state societies, and I'll even give a plug for the CAQ. If you're a firm and you've got views and you're not necessarily actively engaged with us, certainly feel free to reach out and provide us input for consideration in the letters that we submit to the PCAOB. And then it sounds like too, reminding folks to think about supervision of other auditors requirements that are coming up, as well as maybe once kind of the dust settles from busy season, look to confirmations and that you're open for inquiries to the extent folks have them. So thank you for all of that, Barb. I think that's super helpful.
Yeah, thank you for everyone's time today, and thank you, Dennis.
Thanks, Barb. Rohit and Liz, welcome you up on the stage, our virtual stage here. Well, I think I'll start here with, well, thank you for being here this afternoon. Really appreciate it. I think we just heard, fantastic updates from both Anita and Barb, but maybe, given that we just heard from Barb and this panel discussion's focused on PCAOB matters, any reactions to what Barb just covered? And Rohit, maybe I'll start with you. What are some of your reactions to what we just heard from Barb?
Sure, Dennis. I think it was a very helpful discussion. I think Barb provided some really good insights and reminders for both the companies as well as auditors to going into this particular 10K reporting season. A couple of things I think are very important, and I'd like to reiterate there is just look at these spotlights that that Barb was mentioning about, especially the one which talks about the 2022 inspection finding previews. It has a lot of good information, and the auditor should be looking at all that information too as they're thinking about and planning the audit for 2023. The other thing that I really liked about that spotlight is not just focusing on the findings, but also the good practices, so things that are really working well. And I think that's very good information, because as people are reading through this, they know exactly what's working, what are the things that they should be or they could implement on a go-forward basis. So I think that's important. And I think one other thing that I really like about these spotlights is when Anita was talking about how audit committee are important gatekeepers in this particular process, these spotlights also include things that the audit committees should be considering. So they have some questions or topics for consideration as audit committees are talking to their auditors about the audit of the financial statements and the internal control. One other spotlight that I really think would be helpful going into this busy season is also the spotlight on the deficiencies or observations related to the EQR involvement or the engagement quality reviews. I think that's also very insightful in terms of what the PCAOB staff has found as part of their inspections, and again, what the firms and the audit teams can really improve on.
Super helpful. Liz, anything to add from your end?
Well, I was just kind of struck by the audit areas that she called out: rev rec, inventory, biz comms, long-lived assets, credit losses, equity. I mean, that's the poster child list of things that are material, things that analysts are really interested in, that have been subject to change due to economic conditions over the last couple of years, supply chain disruptions, etc. They are estimates subject to bias and generally fairly complex accounting areas. And so if one of our themes today is risk assessment, I mean, my goodness, they've just spotlighted that the things with risk are the things that we need to be paying attention to. And so I would call on everybody who's involved as a stakeholder in this process. And that's not just the auditors, that's management, that's those charged with governance, audit committees, audit committee chairs, audit staff, everybody and calling everybody to say, you know, risk assessment and these complex materials subject to estimate and bias areas are what we need to be paying attention to. And those EQRs, if they want to do their job and keep their role, then they should stand back. And what did Anita say? Don't focus too narrowly. Well, stand back and ask yourself, are we identifying risk? Are we responding to it properly? And it's amazing when your head is clear and you're not down in the weeds, how it's real easy to see that what's in your head is not getting down on paper. It's not in the documentation. So,
you know, I think those are really helpful points, Liz, and I think great takeaways from Barb's remarks earlier. And I think too, when you think about the world we've been living in, and you know, I would imagine risk assessment has gotten more difficult. The risks have probably changed year over year, just given the world that we're currently living in, and maybe risks that some of us haven't seen play out in the markets before, or ones that are being introduced. And so that's why it's important for everyone on the engagement team, from the experienced to the inexperienced, to be focused on those things. And Barb's other point around asking questions when you don't understand, I think is a really important one. So moving on here to some maybe more of our prepared questions. But so this question is directed at both of you. Now that we're entering year end, and some of this I feel like we've already talked about, but what audit issues are top of mind as you plan this year's audits?
well, not to beat a dead horse, as they say, Dennis, I do think that risk assessment has got to be at the top of everybody's priority list. And, you know, Mark covered an awful lot of really good points that I don't want to repeat, but some of what he said really struck me as, you know, that's exactly right. What we need to be worried about. One of it is risks of the audit itself, as opposed to who you're auditing, but the process of auditing. And is everybody doing the job that they are assigned to do? So the EQR's job is different than the engagement partner's job, which is different than the audit senior's job, which is different than the audit committee chair's job, which is different than management's job. And I would stand back and I would ask myself, is there anybody in this list in the process that is starting to falter in performing their duties? Because if anybody is starting to falter, it's going to drag the quality down across the entire process. And I don't think we think about that enough. But if you've got a weak audit committee, you will have some deterioration in that audit quality unless you are purposeful about overcoming that challenge and addressing, quote, that risk. I would also say, who's assigned to the discussion of risk assessment and the documentation of risk assessment? Do you hand it to your new staff who have no idea how to do risk assessment, don't understand the industry, or don't know what the current interest rate environment is because they're too young perhaps to have some sense of change that has occurred? So make sure that you're assigning tasks to the right people and that they are being properly supervised. And as Barb said, that they have the opportunity to ask questions. And I would ask if your methodology allows for risk assessment to be iterative. So often risk assessment's a work paper you fill out, you know, in the first 30 hours of the engagement. You get down to the last 30 hours of the engagement. Do you have the opportunity to stand back and re-challenge? Did I have the right response along the way? So some of that final analytical procedure that you might perform maybe really ought to be focused on what was the risk and what did I do and did I overcome those risks along the way? And some of us might not be as experienced to recognize that that's perhaps what they should be doing during that audit period. I would also mention that a lot of audit methodologies have gravitated towards checklist-driven approaches to aid in efficiency, but to also simplify the complexity of the standards and to present them in a manner that aids in complying with the standard. So I have absolutely no problem with checklists, but checklists can lead to some negative results if the right person isn't assigned, they're not given the opportunity to ask questions. And it leads to those acronyms of Sally and Millie, same as last year, and missed it last year. And so we're going to miss it again this year. So we just got to be careful about these checklist driven approaches. And I think the last thing on my mind would be estimates. And the world's attention is on estimates and the assumptions that are going into those estimates. And what are you doing to really test those assumptions? There's data that underlies those assumptions. How are you getting comfortable with the data that is embedded inside that assumption? And then any information that's provided by the entity, are you sure that it is accurate? And are you sure that it's complete? And are you auditing that as you layer on and use that to build out perhaps an audit test or an expectation about that estimate? So I know that that's pretty high level, but I really think that with all that the change that has occurred in the world over the last couple of years, as you mentioned, Dennis, we really do need to not be so narrowly focused that we are paying attention to where we've put a tick mark and not paid attention to the overall risk assessment and risk response.
Yeah, I think all of those points, Liz, could have been said better. I think you did a fantastic job summarizing that. And I think what I took away from that is really be looking out for everyone's roles within an engagement team and even outside of the engagement team, and look for where maybe you need to address where something might be falling to make sure that that quality can be maintained. Loved your point around checklists. I think we love checklists to create efficiency and simplify things, but let's think beyond the checklists when we're in a world where maybe things are changing more frequently. Loved your point around iterative risk assessment. So I think those are all really important points. Rohit, anything else you'd like to add?
I think, Dennis, like you said, I think Liz really summarized it very well. I think, look, the challenge in this dynamic environment is real. With all these disruptions that we are talking about, the impacts of that on businesses, and that could have on the financial statements, internal controls, that's real. I think even we see all of these reports with reduction in the number of people who are signing up for accounting degrees, right? So there is a staffing challenge, which all the firms are facing at this point in time. We talked about Great Resignation. Those challenges are real. And I think we've got to really step back, make sure that we are assessing the risks appropriately and in sufficient manner, including fraud risks that might stem from some of these things. And then, as Barb was mentioning, equally important is how you're responding to that risk. So you might identify the right risks, but are your procedures adequately addressing the risk that you have identified? So I think just taking a step back, making sure that all of this fits together, makes sense, is very important.
Yeah.
Thank you, Rohit. Thank you, Liz. Thank you to all of the participants in this afternoon's webcast. We really appreciate it. Thank you to the audience for being here. We'll see you next year for our next Audit Insider webcast. Don't forget to sign up for the CAQ's monthly Audit Insider newsletter. You can do that by going to our website, www.thecaq.org. Up on the right-hand side, you'll see a handy-dandy subscribe link. And if you click on that, you can fill out your information and click off all the CAQ newsletters you'd like to follow. But most importantly, make sure you check off that Audit Insider newsletter. Again, thank you all for being here this afternoon, and we will see you all soon. Thanks.